Hello everyone, welcome back to my channel. So this video marks the end of the week number 52 in this Road to 100k Realized Return Challenge. It's been a year since we started this series. It has been quite eventful with a lot of ups and downs, but mostly the overall trajectory has been positive, and this week was no different. I think this has been one of the best weeks we've ever had. I can show you here some of the trades basically that we did over the course of the week, which of course are several, but I think it's much easier to show you basically what we did in Microsoft Excel, of course in our scorecard. But basically, as you can see here, since Monday, and keep in mind that on Monday I managed to get a profit on covered calls of more than $500, and this was of course included in the last video that was posted a day later on Tuesday. But even so, we managed to collect a little bit more than 2,235 euros here. And I must say that there was a particular day, I believe it was on Wednesday, in which you could have done a little bit more, but it was I input the trades too late in the session, and by the time the trades started to be closed out, yeah, it was exactly like that. So it was in here on the 23rd. I only managed to close one of the positions on the QQQ, and so it was not possible then to input the remaining of the trades. But the option was still so deep at the close that probably 180 to 100 more dollars could have been made. But even so, it was an extremely positive week. It was far more than I expected. But let's get into it. Basically, it was a week in which not a lot of economic data compared to other weeks came out. I think the main highlights were the fact that jobless claims came below the expectations, and of course here the PMI for the manufacturing also came below expectations, which is of course a bad sign. But the services came above what was expected, and also growing from last week. But I think the main highlight was of course the initial jobless claims, which went not only below the expectations but below the previous month. And of course this was a very good development. On the durable goods orders, it was still bad, of course, because this means that by being negative, it means that the consumers are not full of confidence in the economy moving forward. Even though of course, it was above, slightly better than expected, but a big tumble down from the previous month. But still, the market basically continued on its way, yeah, it's odd because the market apparently continues to move forward without much concern about whatever is going on in the economy. If I show you here the 1 week for the Qs, yeah, after a big drawdown here, a significant drawdown here on Monday, the market basically went full steam ahead for the rest of the week. On IWM, it was a week of up and downs, for the most part, and that was the reason why we were assigned a few times shares of the IWM, but we still managed to get rid of those before the end of the week. And so this was basically what happens in the market. Now, when it comes to Monday, as I mentioned, we had a $506 profit. We also had sold 2 puts on ARKK, the ETF for innovation, and at the time, the stock of this ETF came down quite significantly shortly after we sold the shares. It came right to here. The options the puts became in the money, and for the most part they lingered across this area over here. Keep in mind that the strike was, the puts was 75.5, so it was around here. So it was threatening to cross the strike at several points over the week, but then on Friday those concerns were put to rest, and the stock bounced, and these puts eventually expired worthless. For the IWM, and this is also important to keep in mind, that we were assigned here on Tuesday. I mean, yeah, we were assigned, and so we were forced to sell the shares, and these shares which were bought here. All right, so we broke even on these shares. We sold these shares at 223, and so we basically came away with a profit from premiums of 1135. And on the Wednesday, yeah, we sold puts on IWM. Those were expired, those were almost worthless at the beginning of the in the middle of the session, and then we basically used the proceeds after buying it back. We used the proceeds to sell 4 put contracts on QQQ. I had to separate them again because one of those puts were closed, were bought back, but the other ones were expired because it was too late for them to be bought back. The order was not completely executed, but even so, this of course brought us some more profit, and yeah, we managed to come out of this trade pretty well. Of course, on Thursday, because of the slight drawdown that happened in the IWM, we were assigned. Even so, in here, what do you see here? This is it. Yep. Oh, and by the way, when on Wednesday, yes, on Wednesday, because there was some excess cash which was not used after bought back these IWM puts. We sold the puts on QQQ because some money was still left. We basically went ahead and sold one more put with a slightly higher strike because we had some excess cash. We still managed to bring in $4, which of course is not that much at the end of the session, but still it was close to the end of the session, but still it was better than nothing. But on Thursday, we were assigned again at a slightly higher price, 224. Yeah, even though we still collected $250 almost in premiums. And then it came an interesting decision that I took yesterday on Friday, which was basically because the stock, and I'm going to also follow up here with the IWM graph for the week. Here, at the beginning of the day, the market had pulled above of 224. So even though we would break even on 224, there was no reason for us to sell the calls at 224. So we sell one strike higher, 225, which if they were assigned at this price, that means that we would have a $1,100 profit. But still, eventually it was clear that this stock would not be assigned at this price. The index came down here close to 222.5. These calls subsequently lost a lot of value, but then the stock started to come back. Even though it never came close to cross the 225 mark, there was the possibility for me to simply let them expire worthless, all right, the calls, and would still keep the shares and keep the entire premium. However, I decided not to do it. I decided to buy back those calls 225 when they were almost worthless, and sell the calls in the money because the stock was already above $224, but I decided still to go ahead and sell the 224 calls, which were basically already in the money. That's why we brought in this large premium. But why did I do that? There are several reasons. First of all, and the most important thing, is risk. We are currently under very or relatively unstable times around the world, the economy, and also the constant U-turns of the U.S. administration when it comes to tariffs and other policies, and so we are in very unstable times. If we did not buy back those 225 strike calls and sell those calls at 224, that means that we would keep the shares over the weekend, and so we would be exposed to anything that could happen, any unforeseen event that could happen over the weekend. I would prefer to be a little bit more cautious, not hold anything over the weekend. That's why we were assigned, and we basically don't hold anything else except our remaining shares for Pfizer at this point. But this was one of the reasons. Now, also another reason, the premium was good, was slightly above premium. The stock was hovering around 224.40, 0.41, so we still get some premium. There was still some time value premium in the calls, even though it was mostly offset by the commission. But still, there was some premium to be had. We would still break even by getting this. We would still break even by selling at this price because we bought these shares at 224. But mostly, it's the fact that we are not exposed to any unforeseen events that would bring the stock down significantly on Monday. Because if the markets open down on Monday, we can now sell the puts at a lower strike price. All right. And that gives us much more flexibility than having the shares and being forced to sell calls to get some premium out of it. And of course, if the stock comes down by too much, the premiums would be either very low, or we would have to extend the maturity of the calls to be able to collect some meaningful premium. And another reason is that at the end of the day, if we have puts, all right, we have one inherent advantage, which is if the stock is relatively stable over the trading day, we can then roll over the position and buy back the stock, buy back the puts, and then roll over to the Qs, the QQQ, which has always a much deeper option chain compared to the IWM, and so we are able, at the stage of the trading day when the markets are much calmer, the trends are already set up, and we are able to sell options with much higher certainty that we will not be assigned. It's much better than to roll over to the Qs in the middle of the trading day, and we cannot do that if we have the shares, because we are forced to sell calls, and if we are already on the strike at which we bought the shares, we cannot roll them over. We can only let them expire worthless or hope to be assigned at that price. So it's much more convenient to hold the puts, to hold the money, hold the cash, than to hold the shares for our strategy. And so I decided, all right, let's basically cap our ability to have any capital gains. We will assume that we will break even. We will not have any capital gains. We get some additional premium, and we basically sell the shares at the same price at which we bought them. And so, we don't know what's going to happen. Also keep in mind that at the end of this month, there will be some news about whether new tariffs will be enforced to the European Union, from, of course, basically leveled by the United States. So it's very important that we avoid at this moment being assigned, because we don't know what's going to happen. Even though so far investors have been pretty much disregarding the impact of tariffs and the U-turns that the US administration has been doing, but it's always better to hold the cash instead of the shares. And so this is basically the reasons why we decided to basically relinquish the possibility of having any capital gains on the shares and just trying to break even. Now for next week, and so the plan will be the same. IWM always first. If there is a chance to buy back the puts at 1 cent, we will roll them over to the Qs, to the QQQ. There is some chance, because we of course we collected a lot of premiums over the past few days. There is a chance that we may be able to sell a 12th put contract. So instead of having a lot size of 11, as we have been doing, we may be able to have a lot size of 12 from next week onwards, but we will have to see if we have enough cash to do it, which also, as you can imagine, given the size of the premiums that we have, that means that I would say on average we will be able to bring in every day about $20 more in premium. And of course this is a very convenient. It will bring us close to our objective much faster. Yeah, we already crossed the $30,000 mark again. So we'll have to I believe that we will be able to get back to our all-time high profit which was around I believe around $34,000 or $35,000, but we'll have to see. But I think we'll be able to get back to that all-time high, to that watermark, in about 2 or 3 more weeks maximum. So yeah, things are looking good. The market has been going in our favor, meaning either relatively stable or slightly trending up higher. This will not keep happening forever. Of course, some trouble will happen eventually down the road, but yeah, as long as we keep taking as much advantage as we can of this situation, we'll hopefully be able to make up for those dark times that usually come around from time to time. But for the time being, this is all. Feel free to leave your comments in the comment section down below, and also I'm available on LinkedIn in case you guys want to ask me any questions. And of course, feel free to like the video and subscribe to the channel, and we will reconvene hopefully this time on Monday at the end of the session to show you what trades were made, and to start the week number 53 in this challenge, and of course the second year in this challenge. And yeah, I'll see you there.